Welcome to Banking to Go by Algbra Labs, your takeaway insights from the world of financial technology and banking, served by today's industry leaders. My name is Nizamuddin, your host for today's episode. Today, we'll be talking about the evolution of fintech and a world beyond banking as a service, where I'm joined by Omer Duzyol, Chief Technology Officer and part of the founding team at Algbra Labs. Omer, welcome to Banking to Go. How are you doing?
Good, thank you very much. Great to be here.
Brilliant. So for our audience, Omer Duzyol is CTO of Algbra Labs, which of course is the parent of the Banking to Go. So I feel especially privileged that you are here today. I won't do too big an introduction because I actually want to delve into your background, because I think part of your introduction is what we're going to be talking about. And today's episode really is about the evolution of fintech-as-a-service. So I will almost given away the secret sauce. But Omer, let's begin at the very beginning. How did you get into the world of fintech?
Great question. So I studied industrial electronics back in Turkey, and I started working as a software engineer. The first role I started as a software engineer at one of the biggest software agencies in Turkey, and worked with various big banks in the region, and spent more than 15 years in the industry for banking and fintech.
You're 15 years into your journey. You started off in Turkey, as you said, and you were there in the biggest consultancy building digital banks, not just in Turkey, in the region. Then you come to London. Now, what year did you come to London?
It was 2017.
Okay, so we're talking 7 years ago. Now, 7 years in the world of financial technology is a long time.
Yeah.
But give us a sense of what was the difference between building digital banks in Turkey and then coming to London. Were we on par, or was it quite different?
Yeah, so it was really interesting as a journey for me, at least, because when I was working in the market back in Turkey, because of all the various reasons, Turkey fintech and banking industry is a bit fast moving comparing to other countries around the world, because the customer base is really demanding in terms of their financial needs and market requirements. So banking industry was way ahead in terms of what they can offer as an end product to the customer base. But similarly, tech was not that great. Because there was a lot of challenges in terms of use of cloud services, infrastructure, software solutions, etc. So involving all those projects in the region and Turkey, I learned a lot of good experiences and also use cases I involved with different banks and brands in the region. And after spending a bit of time in UAE, in Dubai as well, I moved to London in 2017. It was exactly the time where initial early fintechs like Monzo's and Revolut's trying to go out of beta stage.
Yep.
And I started working in the fintechs in the UK and fintech consulting companies as well. So I was successfully adopted the learnings and practices from the Turkey banking market back into to UK and in Euro practices.
I'm so intrigued. So you mentioned it sounds like Turkey was more evolved, in a sense, right?
Yeah.
And it's always interesting because when you think about the evolution of technology, you think to yourself, does the technology come first and people adopt, or does it come from expectations of consumers? And what you're saying is in Turkey, the consumers were demanding more.
Yes, correct. That's what I experienced actually, because technology was always a solution to a problem that you face within the market, but it wasn't good enough because of those limitations and regulations and compliance, etc. It's still moving in terms of regulations and compliance, etc. in the market, but the main trigger was the demand from the customers and all those economical challenges in the region.
And that's an interesting insight there as well, which is you can have the technology, but if it's not enabled by the right regulatory environment and the right compliance, whereas in the UK, we've always been very advanced in the regulatory and the compliance, but the tech was behind.
Yes.
And then you came to the UK, and then you had experiences of building fintech with the early wave.
Yes, and a couple of things I saw as part of that journey in UK. There were certain products and use cases where we used to use every single day since 2000s back in Turkey, like, a BNPL equivalent, splitting, payments through installments, using even POS machines. There was no like mobile applications or like channels that you can instantly control your spending. It was through the POS machines, for example. It wasn't even a big thing back in those days in Turkey as a solution. But when I come to UK and in the Europe market, I saw that there was a big thing going on around buy now, pay later, which was quite interesting for me. So similar examples, I saw a lot of use cases where a product use case could be a good fit with the right technology in the market like UK and Europe by adopting those learnings and practices.
Because when we were in Istanbul a while back, actually, you took me to an ATM and said, this is an ATM and this is the feature that with the phone, right? Which is still alien to me.
Yeah.
Being from the UK, born and raised in London. In fact, we are filming in the area that I grew up in East London. You go to an ATM or a cash point and you were like, you don't need a card.
Yeah, you can just, start with contactless or QR codes.
Still mind blown.
Yeah. And this is, by the way, from 10 years back, it's not a new thing even for the market.
Which is amazing, around the culture of technology and adoption and the people that adopt it. And so then you're building now in the UK. We're in London. You're building. You're working across a range of different banks or other companies, and you're serving different jurisdictions, right? Mm-hmm. So, would love to get an insight from you about your US experience to the UK experience and this thing that is called banking as a service, which everybody talks about. I'm not so sure everybody actually fully understands what it means. So I'd love you to unlock that and tell us a bit more.
So I think if you start from where we are at the moment in the UK and obviously in Europe as well, banking as a service is now a known term. But back in those days when I first moved to UK, it was almost starting off from the ground to serve those kind of services through various third parties and companies in the market. And it was not a thing in the US as well. Like it was not. It didn't exist at all in the US market. But I was able to lead and successfully launch a brand new challenger bank without having those services and providers available in the region by composing various different solutions in the US. So I know the challenges across, starting an idea from zero to scale to a market with different vendors and providers, etc. And on that point, BaaS, banking as a service, as a solution, technically sounds like a great idea, which was a great idea. It was a great idea. It solved a lot of problems for fintechs back in those days. I think it still is in terms of what you can do with BaaS. Because if you go to a provider to get a banking as a service, functionality, so you can just use certain APIs to launch your digital product. So you don't have to deal with some sort of licensing and regulations concerns. Even servicing can be outsourced to the provider. So you can only focus your end product. So you can improve the product and only focus certain things on the product. It sounds like a great idea, which was that helped a lot for a lot of startups initially back in those days. But what happened afterwards? For majority of the cases I saw and experienced in the market. So you start off using BaaS service and then launching the product really quickly to the market. Well, when you try to turn your product into profitability scale, you might end up having different challenges in terms of how you can add different functionalities because you'll have a vendor lock-in situation.
So on that, I'm going to stop you right there because I think I know where you're about to go to. Sure. But just before, I want to take a step back. Now, our listeners will include people who are startup founders, who are looking to build something brand new. It will include people who are CTOs in big banks who are like, the digital bank we need to create. So when we say BaaS today, where does it start? Where does it end from your experience in terms of compliance, in terms of APIs? Just give us a bit of an oversight.
Yeah, a very high level BaaS is kind of in its own region as a jurisdiction. So you get a service from a provider. It covers usually everything from compliance, licensing and regulation, as well as the technical integration, API layers, and the functionalities you need for banking rails, connectivity, accounts, sometimes cards even. But you might end up getting different cards, providers
Sounds great.
integrated.
Sounds amazing.
Yeah,
it sounds brilliant.
It is an amazing idea, but it doesn't really work well if you try to scale your proposition from that point to the different levels. For example, if you want to add new functionalities which is not really available in that provider, so you may end up adding additional providers to the mix. That comes with additional costs to tech and build and product processes. Also, if you're aiming to launch a product that is globally scalable, and if you're using BaaS, that you can't do that with the BaaS, because BaaS is only providing certain coverage for that specific jurisdiction. Obviously, some providers today is offering multiple licenses coverages for different jurisdictions like EU and UK, etc. But if you're focusing on like a really big global, market and scale, you may end up with big challenges there with BaaS providers.
So if I can summarize what you've just shared and tell me, because I'm not the technical guy, which makes me useful and maybe not so useful here. But ultimately what we're saying is a BaaS is very helpful to take a product to market very quickly. But where, 0 to 1 maybe, but the 1 to 10 or the 1 to 5, where you want to scale the business, grow the business, take it internationally, you start coming across challenges. So what may look like you're going to save some money initially, you end up having to be locked in.
Yes.
And that system that's locked in can only work with other systems. So you then have to look into those systems.
Absolutely.
And then you end up having this vendor lock-in situation where actually what seemed like a good idea 5 years down the line, you're just like, I'm in a forced marriage with a number of entities. So let's put BaaS to one side. We are building, we have built, but we're building a brand new enterprise. So do I go and negotiate every single thing with every single entity? Is that?
Yes, there's a possibility that you can do that. But I think the solution is actually not to use BaaS at all. But what you can do then instead, you can just do what you just described, go in each individual, third party in a jurisdiction, get your own license if you want to.
Sounds expensive, eh?
Yes, definitely. And challenging to run all those businesses in that compliant
engineering
manner.
team, the headcount. Yep.
And that's where an alternative solution called Bank in a Box comes in.
Yeah.
Bank in a Box is usually something like a bit beyond core banking. So core banking with some other functionalities, but it doesn't necessarily solve all your problems and challenges you will face when you're launching a full-fledged solution. Because what we think in early stage of startups, usually we think, launching a great product is the only challenge. No, it's the first stage of many challenges you will face. After that, you will have lots of operational challenges and lack of tools and operation life cycles, reporting, regulatory requirements, so on and so forth. The list goes on and on. So the current solutions out the market doesn't really necessarily solve those challenges in other jurisdictions. So you will then again face with different costs and time to solve those challenges individually.
So this is, we're talking 15 years worth of doing this. You have seen this evolve. You've worked with this. You have seen the industry. You have seen BaaS emerge. We've always had SaaS. The BaaS has emerged. Banking in a Box has emerged. So what's the solution?
I think, based on my experience, what we found throughout this journey, I found personally throughout this journey, is a new solution called fintech-as-a-service. It's a generic term used for other use cases, but I'm specifically using for this use case, which covers fintech's needs from software to compliance to tooling and core banking facilities. And that comes with greater flexibility in terms of how you can launch a product from 0 to 1 and scale from 1 to 10. in any jurisdiction. It's obviously overlapping with ideas of BaaS and banking in a box, but there are important nuances between those.
And tell us what are they?
So, as I mentioned on the BaaS, you tightly couple with a partner, and then you have probably only a few coverage for the licenses and jurisdictions that you can operate in. So you can't move something that you've built with a BaaS in the UK to somewhere in Middle East. Especially for Middle East, there are a lot of challenges in certain countries that you have to have your platform and data on the premise because sometimes you might not find a suitable cloud infrastructure there, so you can deploy your technology. Or sometimes regulators enforcing you to deploy things on a physical hardware infrastructure. So you can't solve these problems with BaaS, for example. But you can potentially, depending on the solution, you can potentially solve these ones with bank in a box, but that doesn't solve other problems either. So I think FaaS is addressing those challenges by providing flexibility and modularized approach for certain things, because again, even if you address those challenges, you're trying to launch a brand works with different customer base in different jurisdictions, so you have to tailor your products for a brand new jurisdiction, because one product would work for a jurisdiction A, let's say UK, but may not really work well exactly as is in other jurisdictions. So you have to have all those flexibilities in your solution and an approach.
So what you're describing is a world in which you take the best of BaaS, so the ease of the entire ecosystem being there, which is what people like. It's affordable. But then what you're saying is the different components of, say, a BaaS plus a banking in a box plus there are moats around them almost.
Yes.
So
yeah, a couple of other things worth to mention, because usually BaaS or bank in a box always focus on the back-end elements of the banking world, like the back-end infrastructure, APIs, etc. The idea with BaaS especially, you then build your own end product, whether there is a mobile application or web application. Some providers currently offers a white labeled mobile applications, which is again is good to quickly launch something to market, but it's not good for some customized experience and interactions at scale. So again, FaaS can address those challenges by leveraging different products and approaches and practices, and have greater flexibility to launch products for banks and fintechs really quickly.
And that's the point, right? The FaaS piece is corporates, telcos, banks, etc., etc. It would be really great. I mean, the great thing about technology, right? Like, it's so funny now. There are better Wi-Fi in the jungles of Myanmar than there is in parts of central London.
Sure.
Because, where we finished is where they left off. Correct. And similarly in financial technology, right? What are some of the more exciting developments that you can tell our listeners, right? So I think the great thing about Algebra Labs is the conversations are so broad in terms of where things are. What's exciting you about where the future of fintech is going and financial technology is going? What does it look like?
Yeah, I think FaaS is a solution for now for the current market and demands. I see in next couple of years we will add, as the market grows, we will add different solutions to the mix. We will probably name them differently. I don't know them at the moment, because with the power of AI and use of cloud, and even in Middle Eastern jurisdictions, would bring other tools and flexibilities to the whole mixture of solutions. So I agree with you. So having those challenges in the UK with the basic Wi-Fi of 4G connectivity might not be a problem for a third mover technology partner or provider, because there are lots of learnings from the first and second mover companies. So you can basically adopt those learnings and practices as best practices to your offering. So that's probably
which is where the fast piece that you have is cloud and on-prem agnostic, right? So it's depending. Now, here's the thing: we talk about technology. It's very easy. It's humanless, but behind the tech is a piece of code which geniuses like yourself and your colleagues write. A lot of people have thrown a lot of money into fintechs. You hear about licenses being given in X jurisdiction and Y, and 15, 20, 30, 40 million, and they fail.
Okay.
Part of the reason why they fail is culture and actually not building a cohesive team. How do you successfully, because you've done this now many times, 7, 8 times now, successfully with the same colleagues that you have with you at Algebra Labs, right? Which is the amazing thing. What makes a good culture behind a good engineering team? Don't give too much of the secret sauce away, though.
Sure,
Enough.
So I think it's a great point, because the culture is really important, not only for tech teams or tech companies, especially working with big banks, because they always have some legacy systems they have to maintain. They happy to maintain because that's the main source of revenue and income for the entire organization. They don't want to risk it. But similarly, they also want to keep the products and demand expectations, basically.
The innovation, the entrepreneurship,
exactly,
absolutely,
up to par.
The disruption,
So I've been through this journey multiple times. I think the successful approach as a culture is to detach the whole practice from the mothership bank to a different brand. So you have autonomy over how you develop your product and proposition, almost act as a different startup, which is technically detached from all the slowness and decision making of the mothership bank. So you can go crazy if you want to, but you shouldn't be, because there are lots of best practices you can just follow. So, and if you do that, you can quickly create a product with the right approaches like FaaS and the tools that you can bring into the mixture, and prove if idea is worth it or not. Instead of spending years to launch an internal digital product with a different brand, you can just launch things in a matter of months and see if it's going to worth it or not. So you can kill it or scale on the long run.
So you get the institutional connectivity to the legacy system, but the quickness of a startup incubated outside. I have a final question, which is your experience to date, pre-Algebra Labs, was building digital banks everywhere. The unique thing here is Algebra Labs, you've built a B2C platform in the UK, and you have a B2B builder in Algebra Labs. How has that helped the thinking? I mean, it sounds like you have
it's a great question.
A real life testing environment, right, for you and the team.
So how we approached from day one was to build the right technology infrastructure for a problem that we know here in the UK, also the problems and challenges that we don't even know today. Because idea for Algebra is to launch and scale this proposition and product globally. So you wouldn't know the countries that you are targeting and how they evolve their regulations and how cloud was available or it will be available on those countries and jurisdictions. So the task was quite challenging. But how we approached it was we built Algebra Labs as an infrastructure, and we built several products on top of that infrastructure. And we then launched Algebra UK using our Algebra Labs infrastructure and products within a licensed environment in the UK and regulated environment in the UK to prove our Algebra Labs technology is working at the big scale. So that's how we started off from day one. And how is it going now, basically?
You're eating your own cooking.
That's basically it,
ultimately.
Yes.
What excites you most about generally the future of fintech, FaaS? What's because I know you think about the future. You're fully in the present. You're thinking about what's next. Like, what is the thing? One thing that you think this is the bit that I am most excited about?
I think probably other listeners would agree with this. The most exciting thing about finance and banking is, I guess, not AI, for sure, at least for me. It's the use of digital currencies across multiple jurisdictions, etc. If you're targeting different jurisdictions as a global brand to distribute your solution with a very tailor-made, products in those jurisdictions, you may end up, getting and needing certain connectivity between these countries. I think one of the big things we will see in next couple of years is to use these type of solutions using digital currencies across the countries.
I think it's interesting what you just described there is it's not a crypto, it's a decentralized approach to seamless payments across borders.
That's how I see it.
Yeah, I think it's very exciting. Omer Duzyol, thank you so much for joining us
Thank you
and
very
for sharing
much.
your insights.
Thanks
Thank
for
you
having
very
me
much.
today. Thank you.